Hey traders, welcome back to the channel. In this video, we're going to talk about the Ashford Hospitality Trust, ticker symbol AHT, and this is going to be a little bit of a longer video where first off, we're going to go over more catalysts that are going to push the stock forward in the coming weeks. After that, we're going to take a look at the charts, as always, breaking down key levels, key indicators, and more so we know how to best play the stock moving forward. And finally, we're going to take a look again at price targets. Specifically, we're seeing this $10 to $20 price target being floated a lot on the internet and whatnot. So we're going to break that down and kind of explain exactly what AHT needs to do in order for that to happen. So without any further ado, leave a thumbs up on the video, subscribe to the channel if you haven't already, and let's get started. Okay, so the first major catalyst that AHT investors need to have on their radar for this week is that Ashford is going to be presenting at the National Association of REITs REIT Week 2021 Virtual Investor Conference. This is going to happen on June 10th, and you can still sign up for the conference. Just search this up on Google, and it's going to take you right to the registration page. It's going to be something that I strongly encourage anybody investing in this stock to attend. You're going to get some insights from the executives of the company, and they're going to tell you kind of exactly what their future outlook holds. And I suspect that there's going to be some major positive news coming, especially given that we're seeing more and more positive reports and data come out regarding the travel demand boom that we are currently experiencing. Okay, starting off by just taking a look at the numbers of US hotels being sold out. Just take a look at the chart right here. Starting the year in 2021, nobody was booking trips, but now we are starting to surpass pre-pandemic levels, the 2019 levels. This started back in February 2021. The data says that we were sitting at about 95% of the same period in 2019 with US bookings of hotels. But right now, we are actually breaking past these levels. And so this is a very good sign. We're seeing that travel demand is continuing to increase and head in the right direction. And specifically taking a look at one major hotel company, Hyatt, we are starting to see very, very optimistic outlook. Specifically, the CEO of the company came out and said that as of March 31st, 96% of the company's more than 1,000 properties were back up and running, and occupancy rates as well as room rates are closing in on 2019 levels. And right now, I actually suspect that they are surpassing those 2019 levels. Another great sign. We are seeing the hotels continue to get sold out, return to pre-pandemic levels. That's going to mean that AHT is also going to seek to return its stock price to pre-pandemic levels, or pre-pandemic value rather. But taking a look at even more catalysts, we're seeing this could be actually a sneaky catalyst for hotel plays and all reopening plays. We are seeing that major airlines are currently making a move, pressing the US government on its decision to not remove or relax COVID-19 restrictions that block travelers who have been in much of Europe. Okay, so a lot of European tourists can't come to the country right now because of these travel restrictions. And with the pressure that is ongoing, with the fact that, more and more people are getting vaccinated, that our economy is reopening, I expect these travel restrictions to be lifted very soon, by the end of summer at the latest. And this is not only going to benefit the airlines, this is going to benefit AHT as well, because once those European tourists come to America, they're going to stay in the hotels, and that is going to lead to even more cash flow for AHT. Specifically looking at even more news regarding travel, we are starting to see numbers absolutely skyrocket. The TSA came out and said that it screened 1.85 million passengers on Sunday at U.S. airports, and that's at the highest number since March of 2020, when the coronavirus pandemic kind of started to slash travel demand in the U.S. That is absolutely massive. This is confirmation that we are back at pre-pandemic levels as far as travel is concerned, and that is a major, major positive if that continues throughout the summer. We're going to start seeing, when AHT starts rolling out earnings for Q2 and Q3, that things are going back to normal. And if anything, they are getting more cash flow than they were before, just because how many people have been waiting to get back out into the real world. And another positive for AHT, this is not a new catalyst. However, this is something that I may have overlooked when kind of breaking down the fundamentals in earlier videos. This was highlighted in a Motley Fool article this morning. Specifically, that was just breaking down why AHT was going up, and it started talking about its financial situation. And I totally missed this, but AHT in the month of May did secure forbearance agreements for $3.6 billion of loans, essentially meaning that right now they do not have to worry about kind of paying off their debt. They don't have to worry about interest rates. They are simply focused on reopening their business. And, once the time closes, once they're cash strapped from all the travel demand that's been about to come in, well, then they can start focusing on paying off their loans. So that's just another positive there. I do suspect that, in the next couple of earnings reports, we're going to start seeing a much better financial bottom line for AHT. And this is actually going to help it out tremendously. So that's something that's also pretty positive. It's not new, but it's something I personally haven't covered before. $3.6 billion of loans, not having to worry about repaying that is going to be absolutely massive for AHT. But now taking a look at the charts, starting off by just recapping daily price action. Today was pretty neutral for AHT. Nothing too good happened, but also nothing too bad. It was actually just a pretty boring, regular run-of-the-mill day. We did get this gap up in the morning, and we did try to push into a breakout zone, trying to get a clean break over this 555 resistance level. However, we were not able to get that clean break, and as a result, we pushed back under, and we actually got just a little bit of a sell-off right here at the very end of the day. But we're still sitting at this 522 support level and actually trending upwards in after hours. So things are looking more than fine here. Nothing really too much to read into with today's price action. Taking a look at the indicators. So the first indicator we always take a look at is the VWAP, this yellow line. And unfortunately, with this low volume consolidation this afternoon, we did close below the VWAP. That means that the bears are in control of tomorrow's trading session. However, there's also a lot of momentum trading going on with this stock. So I would not read too much into that. Then taking a look at the moving averages like we always do. The 21-day EMA is sitting right here at 392. The 50-day moving average is at 296, and the 200-day is at 278. As you guys can see, we are well above those levels, essentially meaning that we are sitting in very bullish territory in the short term, in the intermediate term, and in the long term. As long as we continue to hold above those levels, things are going to continue to look good for AHT stock. Now, another final indicator we need to take a look at today is the RSI. We're going to take a look at it on the 1-hour chart. And as you guys can see, we are all the way back in neutral territory with a few days of this kind of disappointing consolidation after last week's rip. Things are starting to look a lot better for AHT if it wants to make that next leg up. As you guys can see, last week we were sitting in very overextended territory. Now things are very, very neutral. And so we are more than ready to take that next leg up if the volume and the momentum continues to remain in the stock. We're now going back to the 1 minute. We're going to take a look at our key support and resistance levels. Starting on the support side, so we did close right at this 522 level, but we are now above it in after hours, meaning that it is going to be our first support level heading into tomorrow. If this holds, things look very good, but if it doesn't, we also have major support at 501, and it's honestly a rage down to last week's weekly lows of 497. So 497 to 501, that's going to be a major support for AHT. If that can hold and we can have a double bottom here, if we go to retest it, it's going to make the probability of pushing the next breakout much more likely, just given that it would mean that we are holding our weekly lows. However, if it doesn't hold and we do crash below that, well, it's not the end of the world either. We also have support at 466 and 420. So like I always say with those, I'm not saying that we're going to retest them. However, if you are interested in playing this stock and either buying a position or adding to your position, you should always have support levels charted out because you want to buy at support. By doing so, you minimize your risk and you maximize your upside. But speaking of upside, let's go into resistance levels. Our first resistance level is going to be right here at this 555 range, all the way up to 570. So it's going to be a little bit of a range right now. It's a range that's been a little bit pesky for AHT over the past week or so. However, if we can get a clean break above that, we do have room to go retest $6 and above 613, which was last week's high. This stock could get really interesting. Room to 662 after that. And if we do break above that, well, we have room to my next price target of 730. So definitely a lot of room to run if we do start pushing upwards and get that clean break of 613. That is something to be very optimistic about. But now taking a look at the volume, we can see that volume dropped off just a little bit today. 42 million shares trading hands, still about double the average volume. So while it does look bad when you compare it to last week's volume, keep in mind that normally this stock trades, in the teens or in the 20s as far as millions of volume go. So things still look good. This is just a textbook low volume consolidation day. If the volume does spike back up to these levels, especially targeting like 100 million, then we are going to be sitting very pretty to make that next move upwards. Volume is a very good indicator of price action. So if you are playing the stock, make sure to keep an eye out on it and make sure that the volume is continuing to flow in the stock. And now let's go right into the price targets. Okay, so we talked about how 730 is going to be my price target for the stock, just based off of fundamental value. It's because of the dilution that's happened in the stock. I don't see much room above the 730 to 750 level based off of the old calculations we did in a previous video. However, a lot of people are out here floating out the idea that this stock belongs at $10 or $20. And I can make a case for $10. Okay. I started doing some math, crunching some numbers. It's definitely possible. I was being pretty conservative with my price targets as I tend to be. I don't want to push anything or assume too much. However, there's a couple of things that would cause that to happen. So first off, when analyzing my price target of 730, right, the reason we calculated that was we took the 2019 pre-pandemic high, which was around $35, and we divided it by 5 because the float has been diluted around 4 times currently, and it also has 30 million more shares that it can dilute through Keystone. So it would essentially be 5 times dilution. However, if you don't take into factor that dilution, because that dilution hasn't happened yet, AHT does have a propensity to dilute shares, but that doesn't mean they're going to. So if they don't dilute the shares, well, then instead of dividing 35 by 5, we can divide 35 by 4 because the current float's only 4 times diluted from what it was pre-pandemic. So that would actually bring my target instead of at $7 to 875. So 875 would be the base there. However, we're adding something on top of that because we're assuming that AHT is about to outperform 2019 levels given the travel demand boom that we are seeing. So when I first made my price target of 730, I was saying that we were going to outperform 2019 levels by about 10%. So it was going to give us a 10% boost to the stock price, putting us, 730, 770, somewhere around there, conservatively speaking. However, if we bump that 10% to 15%, and then we also don't factor in the Keystone dilution, which technically has not happened yet, well, then all of a sudden we are indeed sitting at $10. So fundamentally speaking, there is indeed a case to be made for AHT to go to $10 on a fundamental level. Now, $20 would be absolutely ridiculous still on a fundamental level. That being said, technically speaking, there is room on the chart to run to $20 if we do get some clean breaks around the $10 level. Specifically, the reason for that is if we take a look a little longer term on the chart, we can see that anytime that AHT has been trading in the 10s or the 20s, it's mostly just been a quick gap down or a gap up and a gap down. So there's really not a lot of support or resistance levels, especially in the high teens. Okay. If we get above, what is it, 1453, then we essentially have room to 1630. After that, we have room to 1820, and then after that, we do have room to $20. So there isn't a lot of resistance at those levels based on historical data. However, things could definitely be different this time around. So I wouldn't necessarily rely on it. I do still think $20 is a little bit overblown, but also at the same time, there are people on the internet who know a lot more about this than I do, who are saying that, $20 is within reach. So if that's what you want, then, you can target it. I'm just saying that on a fundamental level, if you take a look at the numbers, $20 at this current diluted float, it probably won't happen, but like I said, I wouldn't rule it out. Also, on top of that, there's really not much potential right now for a squeeze. The short float's only at 6.7%. So there's not really a chance for a short squeeze to get us there, despite, short squeezes being very hot right now. However, if the stock does go to the $10 range, I do assume, shorts are going to start to kind of hammer it a little bit more, maybe get a little bit greedy with it. And at that point, there's definitely potential for a squeeze. However, right now, just taking a look at the chart, we can't call it a squeeze when there's no short float to be squeezed. And on top of that, we still have a long way to go before we get to that level. So no need to worry about that. But like I said, $10 is an aggressive price target, but it's definitely reachable, just depending on really how much more business you think AHT is going to be getting this summer as there is this travel demand boom compared to pre-pandemic levels. If you really think that this is going to be a 15 to 20%, fundamental level increase for AHT, then absolutely it can hit $10. So yeah, it's mostly just whatever you feel is best for you. I'm still sticking with my price target being in the range of 730 to 770. However, I would not be surprised for the smart people of Twitter to be right and watch this thing go to $10 or even higher. So definitely not ruling anything out, and actually very interested to hear what your guys' price targets are. I love all the feedback you guys give. If you have any questions for me, let me know. I'm happy to answer them. If you like this video, leave a thumbs up on it. If you want to see more content like this, please subscribe to the channel. And aside from that, have a great rest of your night.